It's not meant to be used for actual FX markets, right? It's a pledge collateral. Bitcoin, as you pointed out, can be more than a pledge collateral. Bitcoin can actually be transactional. And so it removes that fiction layer of what the SDR can itself be, which truly is a confidence game. Bitcoin, however, actually, if you were to say, use it on behalf to rescue Argentina, you can imagine the collateral is actually more interesting and underwritable for somebody who actually believes in the more kind of, mechanism for what it represents without the other currencies involved.
That's the thought experiment Jeff Park lays out. Imagine Bitcoin being used as collateral within the ESF, facilitating dollar swaps, stabilizing foreign currencies, and bridging liquidity gaps in a globalized but dollar-short world. It's a radical idea, but it makes sense, because Bitcoin isn't just an asset, it's a digital bearer instrument. It can move globally without friction, settle instantly, and doesn't rely on a trust-based intermediary. It removes the fiction that underpins SDRs, the idea that confidence alone sustains value. Bitcoin is confidence, mathematically encoded.
We now have to go dig a little deeper into the mechanics of how the pesos was bought by the US Treasury. And these will touch upon some financial jargons that some folks may not be familiar with, but it's equally important in the central conversation of Bitcoin becoming a strategic reserve. So it's absolutely true that the US Treasury has a certain amount of funds, which is called within the Exchange Stabilization Facility, ESF, that they can use to intervene in foreign markets to bring financial stability, usually in the FX market, but for other things as well, including the bond markets. So the Treasury has an ESF facility, but what's inside this facility is actually not what people think. Some of it is dollars and some of it is other currencies. But the vast majority of what's in the ESF is this instrument called SDRs, which are special drawing rights. Special drawing rights are an invention. It's a Bretton Woods invention that solved a particular problem at the time when there was a shortage of dollars, as the dollar was becoming the main trading currency, and needing to find a way to bring stability by having a co-op model. So if you are part of the IMF, you are able to receive a certain amount of SDRs in participation of your own quota to create a basket of 5 major currencies. And that SDR is a unit of account that can then be pledged to basically be the backstop of a swap line. And so the interesting thing about the SDR is if you think about what that represents as a co-op model, it starts to feel a little bit like what Bitcoin should itself be, right? Because SDR is meant to be a neutral asset because it's a basket of the 5 biggest contributors to the IMF. And it's also meant to be a funding currency of trade amongst the nations. And at the time, in 1960, 1970, this was the closest thing you can imagine to what a neutral asset can be. But now we have something like Bitcoin. And in some sense, Bitcoin replacing the SDR, to me, is kind of the right parallel conversation about what Bitcoin could represent. Because in this scenario, now what Bretton has done is he's actually probably going to need to use the SDR out of the ESF to actually buy pesos, right? Because again, there's not enough dollars and not enough euros in the ESF otherwise to find a liquidity unlock. Instead of SDRs, though, what if you pledged Bitcoin? And that's, I think, the interesting conversation about the role of how Bitcoin can serve in the plumbing of the dollarized economy through the SDR, through the Exchange Stabilization Fund, in the construct of the IMF, that we're just beginning to scratch the surface for, which is why I think it's really important for crypto investors and Bitcoiners to pay attention to what's happening in Argentina. What is happening in Argentina is precisely the learning of the plumbing of how the dollar works and the role of a reserve asset, and where Bitcoin one day might find itself to be more useful than the construct post-Bretton Woods like an SDR would be. The upside of the dollar being the export is great for the US, but the downside of it is that there often can be a funding gap between there just being a shortage of dollars that is needed to service the global economy. And so the SDR is the backstop because it's one step beyond the dollar, in which it's meant to really be that neutral reserve asset. And so when people do trades in SDR, it's really because they believe in like the communal like risk sharing model of being paid back in those respective currencies underneath it. But it's not meant to be used for actual FX markets, right? It's a pledge collateral. Bitcoin, as you pointed out, can be more than a pledge collateral. Bitcoin can actually be transactional. And so it removes that fiction layer of what the SDR can itself be, which truly is a confidence game. Bitcoin, however, actually, if you were to say use it on behalf to rescue Argentina, you can imagine the collateral is actually more interesting and underwritable for somebody who actually believes in the more kind of, mechanism for what it represents without the other currencies involved.
So when people speculate that a company like MicroStrategy, which now holds hundreds of thousands of Bitcoin, could one day become a quasi-public institution or be nationalized for strategic purposes, it may sound outlandish, but history suggests it's not impossible. Private enterprises that accumulate systemically important assets often become entangled with the state. If Bitcoin becomes part of the strategic reserve landscape, companies like MicroStrategy could become the modern equivalent of early banks, private custodians of public monetary power.
But we can't lose sight of the fact that if we want Bitcoin's TAM to grow and follow the path of it being digital gold, then you have to study gold and learn from that history and why it is actually have been adopted as part of the central bank's reserve asset when central banks themselves were not a thing, when it was actually private enterprises. So in that same way, like sometimes it's hard to imagine, people talk about MicroStrategy becoming nationalized one day or whatever, and it sounds crazy, but really at some point, like if you study the arc of history, it doesn't sound as weird as it might. In how private companies, once they're big enough as a lender, ultimately do become subsumed by the government for the national interest. Not saying that's going to happen to MicroStrategy, but more people should be aware of the history of the Bank of England to then think about what the role of MicroStrategy could be for Bitcoin.
Do investors win or lose in those scenarios historically? Right, like if you're the holder of equity in what is now the Bank of England, does the government buy it for pennies on the dollar, or do they pay a premium like a takeover attempt?
So let me tell you a very fun trivia fact that I also rediscovered on this trip to the Bank of England Museum. One of the owners of the Bank of England private stock at the time was George Washington. George Washington actually,
young Washington,
through Martha, inherited a fairly large stake of the Bank of England through her father. And if you go to the museum, there's one section where you can actually see this receipt that George Washington signed on behalf of the family to receive the dividends from the stock. It's not only cool, but it's actually crazy if you think about it, because here's the man who's the founder of this country waging war against the monarchy to which he's privately collecting dividends from the central bank.
So stuff's been going on for a long time.
I mean, the meta here is incredible. Like, and I think it's like one of those like fascinating trivia facts that like gets a little bit swept under the rug. But at times of great change, I mean, these kinds of like dynamics are always possible. And so the other thing I always try to tell people is to have a little bit more grace when we navigate the uncertainty of the political agenda and arenas. Like it's hard to question every motivation of why someone does anything, but usually like things are not that black and white. There's grayness to how these things can get done and co-opted. Appreciation for details means you have to have a nose for nuance. And the other thing that's really interesting is when the Bank of England was nationalized in 1946, there is actually a footnote, which is an incredible language inserted that would baffle all modern economists. It actually says that the Treasury from time to time may consult the bank to work together.
Makes sense.
It's never been invoked.
Yeah.
But it's in there.
Yeah.
It's in there as a backstop to what the relationship between a central bank and the Treasury ultimately is. Because one is ultimately motivated by lowering the debt interest burden, right? That's the Treasury's function. But the central bank is on the other side of it. And it's so obvious to anyone who's understood history that those two things and functions are absolutely related, which is why I think this notion of Fed independence too, we need to kind of move beyond it. I think it's silly that people are still defending Fed independence as if it's meant to be a line that is not in itself completely backwards of its original intention. It's literally in the charter from its nationalization.
Bitcoin then enters this landscape not as an outsider, but as a potential new instrument of state power, or perhaps the counterbalance to it. Just as the SDR once extended the dollar's reach without overt control, Bitcoin could become the neutral reserve instrument that restores global liquidity, not through coercion, but through credibility.